Hey, hello everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to the week's second edition of the Forex Morning Mastery with Sheriff Daramola. And I do hope we all had a wonderful night rest and an amazing uh, week so far, though the week is still very, very early. We've been seeing some bit of traction on some of our assets here, especially the XAUUSD. And of course, it's very important I state here that the week has started on a very choppy situation as most participants in the market, investors, traders, are refraining from taking large positions ahead of this week's all important central bank meeting. Remember, we are looking forward to the first interest rate decision this week. We are looking forward to the Japanese yen interest rate decision. And as a result of this, the market has been a little bit choppy, and so we need to be very, very careful. And most of the time, when the market is choppy, like the situation we have right now, we always tend to make compulsive decisions. So that's why we are going to dive right into the chart one more time to see things from a fresh new perspective, and at the same time using simple parameters such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of these assets, while using this information to position and strategically place ourselves in such a way that we can capitalize on any potential move. Before we begin, I would like to welcome those who are joining us for the first time, those who have been with us for the first time. I'm very excited to welcome you on board. And if you don't know, what we simply do here as technical traders, we come here on a daily basis in anticipation of both the New York and the London session, where we review our existing position if we have any, and at the same time use the information we have gathered to position ourselves ahead of these trading sessions. So we do this on a daily basis, and I encourage you to stay tuned in so you don't miss out on any of these insightful ideas that we shall be deliberating on today. And in fact, the more time you spend with us, the better you get in understanding how this works, and eventually be able to use the information you have gathered here to make your own independent trading decisions. So once again, I welcome you on board, and I look forward to seeing more of you from today on. So with that being said, here we will be diving right into the business as usual. And you know how we do it. The first thing we want to be doing is to check on the economic calendar, as we all know that these fundamental factors often manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the charts, hereby giving us valuable information in such a way that we can use it to capitalize on any potential move prior, during, and even after the event. Now, on the economic calendar, we normally focus on high impact events from the economic docket that affects the asset that we are looking at. And so far this week, we have been monitoring three financial assets. We've been monitoring the GBPUSD, the XAUUSD, popularly known as the gold spot, and of course the USDJPY. And because of this asset on our watch list, we're going to be looking at economies like the United Kingdom, the United States, and the Japanese economy. Now, so far this week, we're yet to witness any high impact event, though the week is laced with a handful of high impact events from all of the economies on our watch list. But they won't be coming in until tomorrow. So we begin to see the anticipation of these events reflect on the chart, as the price action, the market is currently in a limbo sort of a situation where there is an indecision, majority of the key players stepping aside, waiting for this data to give a clue into where they will be placing their bets. Now, because of this, we do not have any high impact event yesterday and none today. Now, let's take it a step further to see if we can see any medium impact event to give us a little bit of an insight or preparation to see what majority in the market are looking forward to. Now, if we bring out, we include the medium impact event still yet, we do not, okay, I think we do have. All right, so let's look at this quickly together. Okay, so we have something to look forward to. That is something that majority in the market will be looking forward to. And of course, for those who have been with me in this community for a while now, you know that the anticipation alone of an event has an effect on the sentiment in the market, which of course will reflect on the chart as price action. And that is what we are studying here to look out for structures and patterns that will help us guide our independent trading decisions. Now, on the economic calendar, we have something from the United States that's in about 3 hours from now, 3 to 4 hours from now. And the first one here is the building permit. Now, for those who don't know what this is an index released by the U.S. Census Bureau at the Department of Commerce, and it shows the number of permits for new construction projects. It implies the movement of corporate investments, and it tends to cause some volatility to the US dollar, and normally the growing numbers of permits projects a positive US economy. Now, if we look at the previous data here, it came in at 1.443 million. Now, there is an economist projection, a consensus projection stating that we are going to be looking at 1.445 million for this month, for the month of August. Now, as we want to wait and see what the actual data is going to be, and in fact, from this projection, we can tell that economists have seen some level of expansion to have projected a figure beyond the previous data. So we want to see how the market is going to be anticipating this event today by sniffing through the market structures to look out for patterns that we can use to guide our trading decisions. Then at the same time, simultaneously, we have this data also, that is the housing stats, and this is also released by the same department, and it is an indicator that tracks how many new single family homes or buildings were constructed. And of course, generally a high reading is considered as positive for the US economy, while a low reading is considered as negative. Now, if we look at the previous data for the housing start for the month of July, it came in at 1.452 million. And for this month, economists are projecting 1.44 million. It's a little bit on the lower side here. So we're expecting a potential contraction in that sector. Then fast forward to later today, we have some other events from the Japanese economy. We have the export, we have the import, and we have the merchandise trade balance. So this is more of balancing of the economy. Now, for the trade balance total, it's released by the Ministry of Finance, and it is a measure of the balance amount between import and export. So this is going to be giving us an holistic view of both of the data we are going to be seeing earlier during the Japanese economic docket here. So we have a series of high impact events we are looking forward to, and in fact the anticipation of this event of course would reflect on the chart as price action. Now, as technical traders, what we are going to be doing here is to sniff through the current market structure to look out for patterns and structures that will help us position ourselves strategically ahead of this event. Now, with the information we have gathered here on the economic calendar, we shall be diving right into the charts to look at things from a technical standpoint. Now, before I go, I have a couple of comments here. I just want to say shout outs to Richard Blackett and Adeniyi Bablola. Thank you very much, guys. You guys are very much wonderful, and thanks for the support. So with that being said here, we will be diving right into the business. And of course, the first asset we are going to be looking at this morning is going to be the GBPUSD. Now, it's a very Like I said earlier, the market condition has been seriously choppy, except for some particular assets on my watch list. It has been a little bit choppy so far, and it's well understood why we have this kind of scenario in the market, as we all know that we have high impact event we are looking forward to. And in fact, the most important one here is the US Fed interest rate decision, where everyone is expecting that there wouldn't be any rate hike for this month. And as a result of that, we can start seeing flow of potentials into safe havens such as the gold, as we saw the gold gain some momentum yesterday. So because of this expectation, majority are thinking that the dollar might not give us enough yield, and as a result have been shifting to other assets. But if we look at the situation here on the GBPUSD, it is quite clear that the market here has been on a strong indecisive phase at this point in time. Now, one thing you will notice here since the beginning of the week is the fact that price action has been confined within the 1.24040 level, which is the highest zone that price action has been for this week, and the 1.23750 zone, which is the lowest area price action has been for this week. And of course, you know how we do it. Whenever we see this kind of situation in the market, it more or less tells us that there is an uncertainty in the market, hence we want to exercise some level of patience, waiting for a signal which definitely will come in the form of either the breakout of the resistance line for buying opportunity or breakdown of the support line for selling opportunities. Now, for those who followed our instruction yesterday, you will currently have a sell position running right now, though it really isn't in profit at this point, as we took advantage of a sell position at the breakdown of the 1.23845 yesterday, as we all projected, and most of the time price has remained in the negative side. And I mentioned in my commentary this morning that we shall be very cautious with our GBP sell position. And for me personally, I will just advise you to close that position, as you can see how sellers have continued to struggle around the 1.23750 area. Look at what has been going on here since yesterday. Every time price comes into this area, we saw how sellers have struggled, that we saw attempt by the buyers to push price to the upside. And in fact, in the last 3 to 4 hours, you can look at the nature of the wick of this candle, giving us sharp rejections at every point in time. So it just gives us an insight that sellers are unable to settle into this area, and hereby increasing the potentials that buyers are likely going to be pushing price to the upside. Now, I would like to let you know how important this particular area we are in right now is if we look at things from an holistic standpoint. Now, if I zoom out, let me show you something very interesting. I think we talked about this in my video on the GBPUSD. Now, that reminds me, for those who have not watched my video on the GBPUSD, it's very important you watch that video, as you will have a background knowledge of how we got to the point we are in right now. And you can as well use that tool as an educational guide in understanding how to use price action to identify trading opportunities. I have the links right in the description box of this current video you are watching, so you might want to watch them after the end of the session. They are duly timestamped, so you can easily navigate to whichever chapter of the video is of your interest. So now let's go back right into the live chat. So I think it will be much more clearer if we scale up into the 4 hours time frame. Now, there's something interesting I would like to share with you here, which will give you a little bit of insight into what is going on here. Now, if you look at the nature of price action since the last week of the month of July, you will see that price has been on a strong bearish momentum. And to further emphasize this bearish momentum, we have a descending trend line marked out on this chart. Now, if we connect the series of lower highs and lower lows, this is what I was able to spot during the course of this weekend. And in fact, this is going to be a major parameter in determining where price will be going for this week. Now, one thing for sure we know is that when price gets to the support line of that descending channel, we see buying opportunities pushing price to the upside. And if price gets to the resistance line of that descending channel, we see price push to the downside. Now, look at what is going on here in the last 24-48 hours in this market. I mean, since last week Friday. Now, look at what is going on. We have price at the support line of that channel. Now, at the support line of the channel, we expect buy pressure to push price to the upside, right? Now, look at what has been going on around this area since last week Friday. We've been seeing how sellers have struggled to break through that area. And in that turn, we see the reflection of buying potential trying to push price to the upside. Though buyers are yet to gain that momentum, but it just shows us that this area might become a platform that will push price to the upside. So we need to be very careful about this area. And if we begin to see patterns and structures that support the idea of buying, we definitely want to be taking advantage of that. However, if price breaks down the support line of this range, then this will further emphasize the strength of the sellers, as a breakdown of the support line of this descending channel will negate that structure to incite more selling opportunities. Now let's go back into the 1 hour time frame. I just needed to show you what things are looking like from an holistic standpoint so you can get to understand or be on the same page with me when we discussed on the 1 hour time frame. Now let's go back into the 1 hour time frame. Now, on the 1 hour time frame, what we have seen here since the beginning of the week, considering the fact that price remains above that support line there, you will see that we have something like a demand zone, which I will call a temporary one at this point in time because the week is still very early, and we have been noticing buy pressure from this area. Now, where do you think is going to be comfortable for us to buy here? And that is the reason why I have said that if we still have a sell position, that we should close out on that position because of the nature of buy pressure around this area. Now, the next question that will be coming into mind right now is, how do we want to buy? What do we want to see on this chart that will make us consider buying this asset? Now, from the look of things, personally speaking, remember we have our key level at the 1.24 area. Remember, we identified this in the video. So for those who have not watched my video, please do, so you know why we had the 1.24 as our key level. Now, you know how we use our key level in this community. When price remains below the key level, we look out for selling opportunities. And if price breaks out of the key level, we look out for buying opportunities. Now, if you look at that key level area, you will see that this area has been a strong selling niche since the beginning of this week. Now, despite the buy pressure we see around the 1.23750, you can see how this zone here between the 1.24040 and our key level had been a major barrier for buyers in this market. Now, for me to start considering buying at this junction, I would need price to break out of the structure to give me a beautiful signal to join an uptrend move. So I would like to see something like this, break out of structure, and if possible, retest of structure, confirming the potentials of buyers to join that uptrend move. And if we are going to be having a buy area around that area, we want to be having a stop loss in place, very, very important, which will be dovetailing to about 20 pips thereabout on this one, which is not bad for this current position. So let's see how the market is going to play out from this current area. So I'm looking forward to buying opportunity above that resistance line, taking out all the sell positions there, giving us good signal that we are ready to join a bullish move. However, in as much as we're looking out for buying opportunities in this market, considering the strong buy zone we have identified around the 1.23750, we cannot ignore the potentials of sellers. This market has been bearish for a very long time, and there are chances that sellers could come in at any point in time. And mind you, the US economy has been very resilient considering the favorable economic data we witnessed in the last couple of weeks. And now that we are dancing into the US Fed interest rate decision tomorrow, everyone is still very skeptical, though there is this emphatic belief that there's not going to be an interest rate decision. But we can never tell. We could come in with some surprises tomorrow and that could create an imbalance in the market. So as a result of this, I want us to also consider the potentials of sellers too. And what is it that we want to see on this chart that will make us want to consider selling? I think you will guess right, of course. For those who have been with us in this community, you know what we would be looking out for, as we will look for the price breaking down this demand zone at the 1.23750, and you can see how critical that area is. It also shares a beautiful confluence with the support line of that descending channel we identified on the higher time frame. Now, if price action takes out all the buy positions around this area, then there are chances that sellers could begin to gain some momentum to push price to the downside. Now, the only condition that will make us want to be selling the GBPUSD today is for price to take out the 1.23750 and, if possible, retest of structure for confirmation to join the decline to the downside. So this is what we'll be looking out for to sell. So we've shifted our focus for selling opportunities below the 1.23750. So these are my views here on the GBPUSD for today. I do hope I made myself very clear, but if you feel that you need some further clarifications into my explanations, feel free to let me know in the comment section. So in that regard, I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right, I see your comments, El Lavit. Good morning, El Lavit. How are you doing today? Glad to have you around this morning. I didn't see you yesterday. Trust you are doing very, very well out there. And thank you for being part of us this morning. So in the absence of no questions, I want to assume that we are all on the same page here. So I will be moving right into the next financial assets on our watch list for this week. So the next asset we are going to be looking at this morning is my favorite, and that is the XAUUSD, popularly known as the gold spot. And in fact, amongst the assets I have been monitoring since the beginning of the week, this appears to be one of the ones that have been giving me a little bit of traction in the last 24 hours. As we can see here, that buyers are gradually gaining momentum, and in fact the ascending trend line we identified here yesterday has continued to hold this momentum strongly. Now today, are we going to continue buying the XAUUSD, or is there chances that sellers could come in at any point in time to take over this market? Now let's look at how the new week started for us here and what led into the decisions we made during the course of the week. And shout out to those who were part of our XAUUSD live window yesterday, as if you are part of that session, you would have taken advantage of these opportunities, and we identified multiple levels that we said we will be using to maximize the potential of this bullish move. Now, during the live session yesterday, we acknowledged a couple of parameters here. Well, the first one was this ascending trend line, which of course has been holding since last week Thursday, as you will see here. So we had this ascending trend line, and since price broke above that trend line on Friday, price had remained above that structure, further emphasizing the strength of the buyers in this market. Now, during our live session yesterday, we acknowledged that price action was confined within a range that was within the $1,930.50 level and the $1,922.50 area, giving us an insight into the level of indecision at that point in time. And remember, I was considering selling at some point, where I said because of the continued selling pressure we observed around the $1,930.50 area, as we saw the same thing happen during the early hours of yesterday, that price could transition into a reversal pattern in the form of a double top structure, where we shall be looking forward to the breakdown of both the ascending trend line and then proposed neckline at the $1,922.50 level to capitalize on a bearish opportunity. And of course, this did not happen, as we saw yesterday. Buy pressure resumed just right around our key level situated at the 1,925 level to capitalize on that uptrend move. And remember how important that key level was. It was our yardstick for trading activity this week. We identified it on the higher time frame. So if you had not watched my video on the XAUUSD, please do, so you can understand how we identify this key level. The link is right in the description box below, so you can easily check them out after this session. So in that regard, we projected this during the XAUUSD live window yesterday, where we identified the $1,927.50 level, where we agreed that a breakout retest of the structure will be all we need to capitalize on that bullish momentum. And in fact, we joined that momentum as price broke out of that structure. We added more opportunities to our existing trade, as we all projected yesterday that a breakout of the $1,930.50 level will be welcoming more buy positions. And for those who took advantage of these opportunities yesterday, well done and kudos to you for being on standby to capitalize on that move. As you are currently, if you still have a buy position running right now, we have about 67 pips on the first position, and we have about how many pips on the second position here? About 37 pips. So we have roughly approximately 100 pips running right now on the XAUUSD as at the first day of the week, which is not bad at all. The week is still very, very early. And you know how we do it in this community. When price action has moved significantly well, the next thing we want to be doing is to move our stop losses and secure this current position, as anything could still happen at this point in time. The week is still very early. We still have major events we are looking forward to, and of course the anticipation of this event could swing the emotions in this market in the opposite direction, hereby changing the trajectory of price action. So in that regard, I will be suggesting that anywhere around the entry zone of the second position seems most appropriate to secure all buy positions on this trade. Now remember that while we're trying to secure our positions, we want to give enough room for price action to breathe, such a way that price retraces to the downside a little bit before the uptrend scenario happen, so we can still be in that trade as well. So with a well-secured position at this juncture in the market, what is going to be our next line of action for today? Are we going to continue buying, or are we going to be getting ready to sell? Now, before we go into the details here, I would like to share with you my advice on the XAUUSD this morning. I already shared a commentary. For those who are with me on both my TradingView and Telegram platform, you will definitely have gotten that. So this is what I said here this morning. I shared this about an hour ago. I said it's time to secure all buy positions as price action encounters a formidable barrier around the 1,934 zone. But the real question on everyone's mind is, will the structural buying momentum continue today? Our stance remains bullish as long as trading activities maintain their positions above the ascending trend line. Now, what do I mean by structural buying? Now, in this case scenario, we have been noticing buy pressure, of course, since yesterday. And there is this dogma in the market right now where everyone is talking about moving their funds into safe haven assets. It's the hedge funds, the banks, and of course, this idea of de-dollarization is also very prominent in the market right now. There's been a lot of channels talking about this lately, and as a result of these, big players in the market are moving their funds gradually to save, to diverse their risk their risk on this instrument. And I think we begin to see the reflection of that since the beginning of the week, but I don't know how long this is going to be. But if we look at things from a technical standpoint, using our key levels, trend lines, and patterns, we can identify the psychology in the market and thereby position ourselves to capitalize on this one. Now, on the structure here, you will see that we have the highest point for the week now, which is situated around the $1,934 level. Now, this zone here is the highest point for this week, and we have been noticing selling pressure around that area since the later part of the New York session stroke the Asian session yesterday. Now, will the sell pressure on this area hold? Well, it depends on how price reacts to this area. And in fact, in the last couple of hours, we've continued to see oscillation of price action around that area. So will price break out of the structure? Well, to buy the XAUUSD at this point in time, I would like to see a breakout, retest of the 1,934 to capitalize on that uptrend move. Now, there are two ways to which we can capitalize on this move. If you have been part of this buy position since yesterday and you're profitable, then we can afford to leverage on the profit we have made so far this week to capitalize and test waters around that area. So having a buy stop order above the 1,934 seems reasonable, and if it does not click, we know that we are just eating into the profit we had made so far this week. However, if you are new with us and you're coming in from a clean slate, then I will be advising you to wait for a retest of structure before jumping into a position here. So that is how we are going to be buying today, and as long as price remains above that ascending trend line, we have no business selling. Now, if at any point in time today the contrary happens and price continues to drop, find lower lows and lower highs along the line, hereby leading to a situation where we have a breach of the ascending trend line. Remember, this trend line has been guiding trading activity since last week Thursday. Now, if price breaks down that ascending trend line, we might likely be getting ready for a momentum shift. And if we are going to be capitalizing on that, how are we going to be doing that? So at this point, I wouldn't be suggesting having a sell stop order, but instead wait for confirmations to happen before we jump into a position. And the reason why we need confirmations here is simply because the market is bullish, at least in the last 3, 4, 5 days now. It has been bullish. And if we see a breakdown of the trend line, it could still turn out to be a false breakdown. So we will need some confirmations to happen in that regard. And one interesting thing here is how the previous resistance line for this week at the $1,930.50 level shares a beautiful confluence with that ascending trend line. So if price breaks down the ascending trend line, price would also have broken down the $1,930.50 level to further give us a sweet spot to look out for selling opportunities. So a breakdown retest is what we shall be looking out to capitalize on any bearish momentum here. So as soon as the breakdown of the $1,930.50 level happens, we scale down to our lower time frame like the 5, 10 or 15 minutes time frame to look out for retest of structure. In fact, we want to see signs that buyers are finding it difficult to climb back above that ascending trend line. And this, of course, will reflect on the chart as continued selling pressure on our lower time frame, giving us beautiful opportunity to capitalize on that bearish move. And in fact, we have multiple levels like the $1,927.50 level, the key level at the $1,925, and of course the $1,922.50 level, where the breakdown retest of the structures will be welcoming more selling opportunities. So this is how we are going to be maximizing manage our positions on the XAUUSD for today. So I encourage us to mark out these levels on our chart, as you will be needing them as a reference point to guide your independent trading decisions for today. And most importantly is that ascending trend line that we have here. So I don't know if you have any questions. Feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever as regards to the current setup. and let's see how I can be of help in that regard. And you can as well use that time to mark out these levels on your charts. Okay, I see your comment, El Lavitz. You're saying that your challenge you have is that you are used to the red and green candle and finds it difficult to, okay, I understand what you're trying to say there. Well, personally, the reason why I don't have colorful charts is because of distraction. I don't want my mind to be distracted, so I want black and white on my screen. And where I want my colors to come in is where my key levels are, my trend lines are. That's where I want my colors to come in. And if you have been in this market for a while now, you should have known by now that the red and the green candle does not really matter. All that matters is trying to understand the emotions in the market. Is the emotions positive? Is it negative? If it's positive, you continue to find higher highs and higher lows in the market. And if the emotions are negative, you continue to find lower lows and lower highs in the market. That is the most important thing you want to see, and that is understanding market structure. But if you, I know it's going to take some time to get over that, but I want you to have that fundamental understanding in your mind. And thanks for your comment, and I do hope I was able to shed more light on your observation there. Then I can see Eric Mudavadi. Good morning to you, Eric. How are you doing today? I'm glad to have you around. So you're asking here that if you check the XAUUSD on one day, there is a descending trend line that will indicate a break above. If you check the XAUUSD on one day, there is a descending trend line that will indicate a break above. I'm not sure I understand what you're trying to say here, Mudavadi. I'm not sure I understand what you're saying. Which day are you talking about here? Please let me know. Try to rephrase that statement so that we can be on the same page here. I will look forward to seeing your rephrased statement so that we can address that issue. All right, everyone. So in the absence of no further questions, I want to assume that we are all on the same page here. So we shall be moving right into the next financial asset for this week. So the next asset we are going to be looking at this point is the USDJPY, and we had a buy position triggered here yesterday evening after we saw a couple of breakouts of that 147.720 to give us a buy position, and I made mention of this during my commentary this morning on the USDJPY. I told us all to secure the position, and if you had done that, you must have been taken out of your position with a modest size of profit, or at a worst case scenario, break even. Now, for the benefit of doubt, let's run through my commentary this morning as regards to what I said on the USDJPY. Then we shall be going back into the live chat to review what is really going on that time frame. Now, an hour ago, I updated this on all of my platforms, TradingView and Telegram platform. So I said here that the market condition have been choppy, with investors refraining from taking large positions ahead of this week's pivotal central bank meetings. Now remember that both economies are going to be having their interest rate decision coming up later this week. The US is having theirs tomorrow, and the Japanese are having theirs right on Friday. And because of this event, you can see how the market participants have been in a limbo in the last 24 hours. As you will see, price action has been very, very choppy around the 147.890 and the 147.600, further emphasizing the level of uncertainty in this market. However, amidst this uncertainty, there is a bullish momentum brewing. Price action decisively broke through the level we discussed in our live session yesterday at the 147.720. it's time to secure those positions, but keep a watchful eye for new trading opportunities. Now let's roll back into the live chat and see what we're really saying here. Now at the beginning of the week, it's quite clear that price has been confined within this range, that is between the 147.890 and the 147.600. And remember what I said about the zone, how critical and sensitive this zone we are is. Now, this time last year, remember we had the intervention by the Bank of Japan, and the potential, there is a fear in the markets that probably the Bank of Japan will intervene anytime soon. And as a result of this, we saw this fear looming up on this chart, as majority are not sure of what to do. So price has been oscillating within a range for most of the part of the last couple of months. But within this choppy scenario, we've been seeing some higher lows as well, which further emphasize the potential that buyers might likely be pushing price to the upside. Though we had hawkish comment from the Bank of Japan's governor, that was last week Monday, who was talking about dropping the current monetary policy, but we had a counter statement by the Bank of Japan policymaker stating that the dropping of the current monetary policy will be dependent on economic data. So because of this, I think there is a renewed resurgence of buying pressure in this market. And in fact, if you had watched my video on the USDJPY, remember we had a very beautiful and simple uptrend continuation pattern identified on this chart. So for the benefit of doubt here, let me run through that 4 hours time frame and show you what it is looking like an uptrend continuation pattern. So if we go to as far back as the mid-year, we can see that price has been very bullish. So we had an impulsive move that brought us into this point as we saw price transition into an uptrend, what's it called, an ascending triangle. And an ascending triangle from a technical standpoint is always considered to be an uptrend continuation pattern. And the idea behind this is that if price continue to knock the ceiling at the 147.950, which of course is our key level for this week, we might likely see at a point that ceiling will cave in to welcome buying opportunities in such a way that a breakout of that resistant line, retest of that structure, will be a beautiful opportunity to join an uptrend scenario. Now, as a result of this, we expecting some bullish momentum to come in to push price to the upside. Now, in as much as we're looking out for buying opportunity, that doesn't mean we would negate the potentials of sellers. And of course, as we have seen since the beginning of this month, price has continued to find selling pressure around this area. And in fact, we have an ascending trend line to work with in that regard. So let me show you that ascending trend line right here. So since the beginning of this month, price had consistently found higher lows, as you will see here. And if this higher lows is broken or breached to the downside, we might likely be seeing some bearish setup that could give us some opportunity to join a bearish momentum, probably into the 145.00 area. And in fact, this will be giving us a minimum of about 250 pips to catch here if price action ever breaks down that ascending trend line. So this is what we are going, this is the idea guiding our trading decisions for this week. So I needed you to see what is looking like on the higher time frame. Now let's go back into where our center of focus is for today. Now remember, we had a buy position yesterday, and if you look at the structure since the beginning of this week, you will see how that area between the 147.720 and the 147.600 area has been a strong buying niche in this market. You will look at the nature of the wick of those candles. You can see they are very, very sharp, giving us signs that sellers have been finding it difficult to settle below the 147.600 since the beginning of this week. And one interesting thing about the structure that also makes it more intriguing is the fact that this buy pressure is sitting just exactly above that ascending trend line we identified on the higher time frame, making it a little bit more interesting and supporting the idea of an uptrend continuation. Now, for those who have been with us in this community for a while now, you know how we use our ascending trend line. As long as price remains above the ascending trend line, we continue to look out for patterns and structures that support the idea of buying that asset. Now, in this case scenario, I personally have had my buy stop order again placed back again at the 147.720 with the hopes that price will still continue to the upside. Now, in that scenario, let's position ourselves anywhere above that area. And in this point, I would like us to have a wider stop loss so that we can give enough room for price action to breathe around here. Now, remember how sensitive I said this zone is, and it could come in with some volatility. We have some events coming up later today, remember? So let's ensure we have enough room. In fact, we can have it to about 15 to 20 pips room to ensure that we have enough space for price action to oscillate within before the uptrend continuation happens. Now, if price continues to climb and find new highs, breakout of the 147.890 and the breakout of the 147.950 will be welcoming more buying opportunities in this market. So we do want to be marking out these levels, looking out for more opportunities to capitalize on that move. However, if the contrary happens in this case scenario and we have a situation where the ascending trend line is broken to the downside, this will be the first time this ascending trend line will be broken this month, and it will be a good signal that price may likely be shifted towards the downside. And if this happens, we want to be on standby to capitalize on that move. Now, how do we capitalize on that move? Well, we want to see a breakdown of the ascending trend line. In fact, I would like the price to break down the 147.600, taking out all the buy positions around this area to give me some confidence that, okay, it's time for us to join a bearish move. However, if price do give us signs even before the breakdown happens, we want to capitalize that move. And what is it that we are going to be looking at in that regard? Something like the breakdown of the ascending trend line, retest of structure, and the inability of price to climb back above that ascending trend line, followed by sudden pressure below that structure, will be a beautiful signal to join the bearish move. Then we could have a sell stop order below the 147.600 to capitalize and maximize that bearish momentum. So at this point in time, the ascending trend line is a very critical parameter in this market. We want to be marking that on our chart and identifying these levels too, as well as we will be using them as a reference point to guide our independent trading decisions. So I hope I was able to make myself clear, but personally I'm of the opinion that price will go to the upside, but if structure states otherwise, we of course want to be on standby to capitalize the move. So I want to know if you have any questions as regards to my explanations on the USDJPY or the previous analysis I've done so far. Let me know right in the comment section. So as usual, I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we draw the curtain for today. All right. So in the absence of no questions, I see your comment, Richard Blackett. Okay. All right. All right. So in the absence of no questions, I want to assume that we are all on the same page here. And in fact, it has been a wonderful moment shared with you this morning as we were able to look at 3 assets today, and which is what we are monitoring so far this week. We have the USDJPY, we have the GBPUSD, and of course the XAUUSD, popularly known as the gold spot. And on all of these assets, we were able to identify simple setups using only simple parameters such as trend lines, key levels, and chart patterns to gain valuable insight into the nature of price action on this asset. and hereby giving us valuable information to position ourselves in such a way that we can capitalize on any potential move for today's trading sessions. So I just encourage us all to exercise patience and allow our structures to mature before jumping into any position. And mind you, the anticipation of major events always comes with compulsive decisions. So if we know this, we can always mitigate against it. Mark out your chart, write down your plans, and trade these plans. So I wish us all the best of luck today. And for those who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And of course, I look forward to seeing more of you, as the more time you spend with us here, the better you get in understanding how this works and eventually be able to use the information you have gathered here to make your own independent trading decisions. So once again, you are all welcome. And don't forget to support the project. Your likes are the most cheapest way you can support this project. If you have found this content helpful and useful in making your independent trading decision on all of these assets we talked about today, please give the video a thumbs up. Your likes are valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. Thank you in advance for doing so, and in fact, I look forward to seeing you right in the comment section of both my TradingView and Telegram platform. And of course, don't forget to be part of the XAUUSD live window, which is coming up in about 5 to 10 minutes into the New York session, where we come to monitor real-time action on the XAUUSD assets. So see you guys then, and do have a wonderful evening. Bye-bye.